this computer. All right, here we go. What are we? Episode 10 of the MAREI podcast. Hey, everybody. My name is John Wires. I'm here with James Gregg.
Hey.
We're part of Boulder Creek Investments here in Kansas City. Today, I am here with Colin Douhit. He's part of Atlas Property Management and Construction. And he's here to tell us about his businesses today and how they kind of correlate with each other, obviously, to keep each other running. Before we get into, Colin, your story and what you do, of course, you know, we're part of the MAREI podcast. Just FYI for anyone that wanted to advertise with MAREI, check them out. Definitely a lot of exposure out there. It's $4.99 a year, $135 a quarter. You know, you get access to the newsletter that goes out to thousands of investors, and the print, and obviously the website. And you can check out the more membership information on marei.org/membership. So I wanted to get that out of the way, and we can get into the interview here. Colin, go ahead and tell people about yourself and what you do.
Yeah, absolutely, John. So my name's Colin Douhit. I'm with Atlas Property Management and Atlas Construction. A property manager, I'm a contractor, I'm a real estate investor professionally, and a father and a Christian outside of the work environment as well. So so I've been in the real estate game now for about 3 years, and started out as an investor and then naturally progressed into starting the other two businesses.
Okay. And so you said you have a partner on the construction side, and you mostly head the property management side. Is that correct?
That is correct. Yes.
Tell us, I guess, a little bit about the property management company. You know, a little bit about it, and then go into the construction, and then we could kind of ask questions on both.
Yeah. So I fell into property management. I don't want to say by mistake, but it wasn't something that I was really planning on. As I started to build my own real estate portfolio, I had to start managing them as they grew. You know, when I was first keeping my own records of who had paid, I was just using QuickBooks, and it was super basic and not very efficient. Ran into somebody that suggested I try property management software. I used Buildium. That's what they recommended. I've really been happy with it. So that's what we used. As we continued to grow, I had the thought, I was like, man, it'd be really great if I could, you know, become a third-party property manager, have the scale to justify having an employee. Then I could get all my properties managed essentially with somebody else, and I wouldn't be having to take all the phone calls. And then really just kind of fell in love with the property management model and the business as I started to dig into it further, and from my own experiences managing my own properties. And we've really just kind of taken off from there. And now we've got 2 PMs and the office admin. So kind of scaled a lot faster and a lot bigger than I ever had thought it would be.
Right. Yeah. We always kind of find ourselves, with enough properties, possibly doing property management. It's it's a thing you naturally could get into. And then you mentioned also, acquiring properties for yourself and other people. You obviously need to renovate them. And it sounds like that's where the construction side came in.
Yeah, absolutely. We were having enough maintenance calls on my own properties that I had been keeping a couple guys busy for about a year. And, with this natural progression, starting to work and meet with more investors, my background professionally, I'm an engineer, project manager for construction companies. So that was a natural segue for me. The construction part of things didn't scare me. So we started to add more people and more properties to that as Atlas Property Management grew, took on rehab and renovation projects. And then, like I said, I've got a partner in that company. Him and I did engineering school together. He was also a project manager for some large construction companies. We work really well together, and it was just a natural fit for the two of us.
Very cool.
Nice. Now, I'm curious, Colin, you said when we were talking before, it's been around 3 years since you kind of got into the property management game. Is that correct?
Well, it's kind of got into the real estate game, period.
Okay.
Yeah.
Okay.
Yeah. So, kind of like everybody, I think I started on the rich dad, poor dad, gateway drug.
Right.
Yeah.
And went from there.
And now you've scaled up into third-party property management, third-party construction services. I'm curious, what sort of investor are you like really well suited for? Who's your perfect customer?
We've really found a niche with out-of-state investors. That seems to be the easiest one, I guess I would say right there. Of the 320 plus properties that we manage, if we take out the properties that I or my partners in those properties own locally, I believe we've only got two investors that are in the Kansas City area, and they account for very few properties. And then the next closest ones are going to be Omaha or southern Missouri, and then the rest of them are all generally on the coasts.
Wow.
Yeah. And then a lot of them too, since we have the integration with the construction and the rehab, they're typically wanting to do a value add through extensive renovations or repositioning of the properties. We will come in and take over properties that don't need a major reposition. We've done that in the last week. Actually, we took on two different complexes. One was a 10 unit, one was a 14 unit that just had high vacancies. Rehabs were already done. They just needed the effort put in to get them leased up. So that's where we came in.
Nice. Okay. And now you mentioned kind of small multifamily stuff. Do you do single family as well?
Mm-hmm. Yeah. So, I mean, that's how I kind of cut my teeth, was on the single family on my own properties. We do have quite a few single family properties, but I would say right now we are 60 to 70% into the multifamily space.
Oh, really? Okay.
Mm-hmm. Yeah. We've been taking down some larger chunks, 50 units, 30 units, 20 units, 12, 16 units at a time. So.
Gotcha. Yeah, I ask because, a lot of people that are involved in MAREI are, kind of smaller investors looking to get started in investing, those types of things. So working with a firm like yours might be something that they should look into, assuming that you do the single family. It sounds like you do.
Yeah, we do. I've actually got an appointment scheduled for tomorrow morning to go meet with another investor, and he's got a single family house. He just got done rehabbing, was a referral to me, and we're going to go, take pictures and get it listed for him.
Cool. Sounds great.
Yeah.
So you mentioned that, obviously you obtain your own properties. Do you still manage a lot of those now, or is it mostly clients?
We've sold only a handful of our properties, so we still have our own properties in the portfolio. Yeah.
Okay.
But we haven't been purchasing aggressively recently because we've just been so focused on the construction, the property management,
the business side.
Mm-hmm. Yeah.
Did you did you scale to get that many properties during the time after our last real estate crash, or how was that?
Yeah. I started picking up my first properties 3 years ago. So yeah, it was after the last real estate crash. Yeah.
Okay. So yeah, it was fairly recent then.
Yeah. I was in college during that crash, so I couldn't tell you about much of that on the real estate side of things.
Yeah. And hopefully we don't have one coming up here, but things seems like they're pretty stable. Obviously it's based on, the area and the region. What are you seeing, just before we get into more of those businesses a little bit closely? Give us an update on what you're seeing as far as all the COVID stuff. I mean, are you seeing stuff being pretty stable, pretty high collection, pretty low vacancy, or what mix are you seeing there?
We're seeing pretty low vacancy. Like I said, we took on a handful of those units that had high vacancies when we took them over. And I think I'll just attribute that to property management not being aggressive, because everything that we're listing, we've got quite a few on the market right now, but we're getting a ton of response and a ton of applications. So vacancy to me hasn't been hit too much. Mm-hmm. Collections is a hard one for me to gauge due to the fact that we are in some pretty aggressive repositions of properties that had poor management in place before we got there, poor tenant base. So when we took over, there was already a large outstanding balance. So we can't evict anybody right now either. So We're having to deal with this rolled over of poor tenants that we didn't get to choose.
So it's like a double hit for how difficult, dealing with this stuff is when you're taking on a mismanaged unit. You need to change over demographic and being during this time when obviously, it's tough to evict people. Yeah.
So on the properties that, have a higher quality tenant base, we haven't really had too much of an issue. Right. Our 52 unit complex, we've had 2-3 people reach out for COVID related unemployment, and we're working with them on that. But other than that, we haven't had a ton of COVID related issues, honestly. I mean,
Mm-hmm.
5-10% at most, probably.
Yeah, it sounds like they're kind of spread apart because no one that we've talked to recently really had, a big chunk of the problem. It's maybe it is spread apart. Everyone takes a little bit and it's not so bad.
Yeah, I think that's the truth. I mean, one of the big complexes that we manage is in Pleasant Valley, so it's right near Clay Como, and I don't even know that anybody there works at Clay Como. So
interesting. What's that?
Oh, I was going to say, aside from COVID related issues, what are some of the other challenges that you're facing in either one of your businesses today?
The big issue, honestly, right now is just dealing with these repositions of properties. On the business operationally, everything's been running pretty smoothly. My team's performed excellently. I have no complaints about them. They do a great job helping manage the properties, communicating with the tenants, getting them leased up, taking care of all the maintenance issues. Really, the biggest issue that we have is just poor tenants that we inherit right now. At the end of the day, if we didn't have to deal with those people, we wouldn't have any issues.
The property manager says, if we didn't have to deal with the tenants.
Yeah, they always seem to stick around somewhere. It's definitely the property manager's worst nightmare.
Yeah, but that's if we can work to bring on a property for an owner and then help get rid of those problems and make the property perform better, we kind of welcome that as a challenge at this point. And that's, if we were starting to specialize, it seems that that's what we've become really good at. We know we've become really familiar with the laws. We have really good relationships with attorneys. We know how to handle them. We know how to effective and legally coerce tenants to leave, especially if they're the bad ones. If you're getting reports of drugs or crime or whatever fill in the blank it is, or just domestic related issues, we can work with them to get them out and help reposition the properties.
So if a new client came to you and wanted to know details, like what's your pitch to them as far as how you would take them under your wing as far as like maybe costs or process on how to get started with new clients? Obviously, you probably evaluate the percentage of your service based on doors too.
Yeah, so we have a scaled fee structure, so it does decrease with the number of doors, and lease-up fees can be negotiable as well as those doors come up, because lease-up fees, especially on some of these bigger projects, they can really start to chew up your income on an annual basis. Also, we need to look globally at what's their rental income. If you're bringing me 20 or 30 doors that are all $500 a piece and there's no upward mobility, and I'm going to have a high demand tenant base and property, it's not worth me cutting my fees a whole lot, because that's going to be such a time suck on my managers. If you're bringing me 20 Class A properties that are all $1,200 a month, then that's going to be a totally different ballgame.
Right. Yep. That definitely makes sense.
Mm-hmm.
And as far as the other fees, as far as like doing showings and repairs and stuff like that, is that mixed in a percentage, or is that billed separately? Obviously, it probably depends on doors too, single family versus apartment complex.
We try to keep our number of fees down pretty low. So we've got a lease up fee, we've got a renewal fee, and we have just our monthly maintenance or monthly management fee. So maintenance coordination does not incur an extra fee. Showings, pictures, those do not incur an extra fee. We have our lease up fee, and it's just all kind of wrapped up in that, on the front end side of things.
And then as far as your construction side goes, I'm sure you usually charge like a general management of that. And is it an all-in type thing? If, new investors were looking to buy a single family, need renovated, or apartment complex, you guys do materials into that, or how's that go?
Yeah, we'll provide you with a hard bid, and we'll say, okay, here's our scope of work. We're going to repaint everything, refinish floors, trim, doorknobs, pulls, et cetera, fixtures, everything like that. Here's the all-in price. And then, generally And I'd say it's kind of hybrid turnkey-ish, right? So the investor can still buy the property, they can still do all the value, but we can help them with the analysis on, what's the construction cost going to be, what's the rent going to be on the backside once you get it all done, and then once we go through the construction, seamless handoff to the property management side of things.
Nice.
Makes sense.
Mm-hmm.
So I'm sure there's some hurdles that you're hitting as you're maybe growing your business, or as you're kind of dealing with some of those rehabs, maybe dealing with some of the clients that you're working with. But what are some of the lessons that you've learned in growing your business, or in just doing what you're doing on a day-to-day basis?
Yeah, well, one of the things that I learned is kind of where my area of expertise is. Right. I really enjoy the property management, and, like to think I'm fairly decent at it, but operating the property management business, I enjoy that. That's kind of my passion. And I've got, had a little level of success with that. I did realize that when I was trying to manage properties and manage the construction portion of things, that I was not able to do them both effectively. So me having a partner on the construction side to manage all those properties was really a big win, and saying, okay, listen, you're really good at managing the projects. You stick doing that. I'll stick to the properties, and we'll just tackle them together, but separately.
Okay.
Really just stay within my lane and know where my lane is good.
Yeah, that makes sense.
Mm-hmm. Yeah, that was the biggest, introspective learning moment, I guess, learning process over the last 12 months.
Mm-hmm. Okay. And then one more lesson and learning question for you. Like I said before, a lot of the listeners, a lot of the viewers are MAREI members, smaller investors, maybe some larger investors, but people that are, really trying to understand this business a bit better. What advice would you have for them? The person who wants to buy a rental property, the person who has one and wants to get to five, those types of
Mm-hmm.
people.
Oof, so much advice there. Have more money than you think you'll need. That's one that I've learned personally through some of my own properties. Develop your relationship with your property manager and with your contractor early, even if you're still just looking for properties. And we like to provide a lot of services through the due diligence process, through the looking. We'll provide, rough estimates, looking at pictures. We'll walk a property with you if you're pretty serious, or if they're out of state, we'll walk the property without them, and then put together an estimate so they can understand how much the rehab is going to cost to make sure that it pencils. I feel bad for investors when we get brought in and they're already under contract on the property, and we're like, okay, well, you wanted a $20,000 budget, but it's going to be 40 because, you're out of state or you're even local and you're looking at these pictures and you totally missed, these three huge big ticket items. It needs a new roof, a new HVAC, and everything needs to be painted.
Yeah.
That's what I would say is, have those relationships through the due diligence period so that, you can make sure that you're not getting burned.
Gotcha. Okay. Thanks.
And if your contractor or property manager won't do that for you, then I would say find another one.
Yeah, especially for those out-of-state investors. I mean,
Mm-hmm.
What else can they do?
Yeah, I've heard stories about property managers not wanting to talk to an owner until they've got something under contract or they own it, and by that time it could be too late. They're going to lose $1,000. They're going to lose $10,000. That's provides get some value up front as well.
Okay.
So,
yeah.
but on the same token, don't extract a ton of value and then not buy something. My first investor experience was rough, and I ran around for 4 months looking at properties, doing analysis, et cetera, for, a couple of weeks. I spent 25 hours looking at properties on the road for him, just for him to buy one or two and for it to be a bad experience after that. So.
Yeah, it's tough. It's definitely like, contract bidding. You got to get out there and do bids, and sometimes you don't know, if they're going to come through.
Mm-hmm.
But we definitely encourage people to go out there and engage their property managers early, because you guys have insight on comps, the ARVs, Yourself, obviously, the construction side of it. So you're going to have an idea of what renovation is going to cost, because that's going to play a big role in, your purchase price and your talks with the lender, possible investors, things like that. So it sounds like it's a pretty big deal. And that's good. It's good to see, an all-in-one service where you can have accountability on both those fronts.
Yeah.
Especially if you're out of state. And even if you're in state and need expertise, because, you might not have familiarity with the area.
Yeah, exactly. So just never hurts to engage somebody early. That way, at the end of the day, it's going to hopefully save you from making a mistake.
Yeah. And in the end, lots of money.
Yes, exactly.
So, it's a long-term thing. You guys want to make a good relationship because you want to have future deals with these people. Referrals are huge. And it's a long-term business strategy. You want to take care of them so they keep, feed you more properties, and at the same time you can, keep their cash flow and the NOI up.
Yeah, absolutely. It's a circular relationship.
Yeah, that's a big deal. Okay, sounds good. No, thanks. Appreciate the overview of Atlas Construction and Management. We'll go ahead and wrap it up. Go ahead and give them the contact information so they can give you a call.
Yeah, absolutely. So if you want to shoot me an email, it's colin@atlas.rentals, no .com or anything, just atlas.rentals. Find me on LinkedIn, Colin Douhit. If you want to give me a call, our office number is 816-410-8800. If you want to reach out to me in any of those ways, we'd be glad to take some time to chat with you, answer any questions you have, try to help you out.
Sounds good. All right, everyone. Appreciate everyone joining us for the episode 10, and we'll be back with more shortly. Thanks, everybody. Thanks, Colin, for joining us.
Thank you, guys.
Thanks, Colin.
Bye.